Hey traders, this is Blake Morrow with Traders Summit, and with me today I have Mr. Richard Matthews, and you're with One.io now.
That's it. Yep. I suppose it should be called two because I'm so huge. I don't think I'm getting to change that name.
So before we get started, tell us what you guys do at One.io.
We actually are an all-encompassing, I guess, financial services business. Not really financial services. We handle crypto. Got an OTC crypto desk. We take crypto in, match payments for it. Also make payments in fiat currencies, and we're just starting out into FX, which is what I'm overseeing.
Wow. Well, it sounds like you got quite a job ahead of you, converting all the crypto traders into currency traders.
Or vice versa.
Or vice versa. So let's talk a little bit about the currency market today. We've had the dollar that's shown a lot of strength recently. We just hit new highs. Then we had a bunch of PMI data come out, a lot of whippy price action. What do you make of all this, especially with the? I mean, you live in the UK, obviously, so you got the UK PMIs, services PMIs came in below 50 in contraction territory. What do you make of all this price action?
I think it tells us one thing, that the market's very, very thin. So almost the last week of August, we've got our last bank holiday coming up this weekend. So London's pretty empty. Kids go back to school next week, I think it is. So I think most senior traders are off. So it's a bit scarce in terms of volume, which tends to create whippy markets. And I think, I'm not a great fan of PMIs because I think it's one of those, it's how you phrase the question, and I think people are very reactive to it, and there is a little bit of doom and gloom. We're coming into winter, blah 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 blah. So I'm not overly surprised that the numbers weren't brilliant. What I did think was interesting that they still show strong wage pressures in the UK, and it's becoming a problem. And starting to hear it more and more and more. So that was the one, I guess, as an employee, a bright spot. But generally, that's not particularly good news. But there again, PMIs in the States weren't brilliant. PMIs in Europe were, awful. So it's just the wage pressures, which is the interesting part of it. And it goes back to the old dichotomy. Do you keep on hiking rates to control wages whilst the countries tip over into recession? I think they will, but, I'm maybe in the minority.
All right. Well, if they're going to do that, that would make you a sterling bull. Right?
Yeah, well, yeah, I suppose it should do. I'm not. The swaps markets and derivatives actually are starting to mark back what they think the Bank of England will do. I still think they'll do 25 basis points, but I think the anticipation is that that'll be it. One more and done. It's wrong. But that's how the market sees it. You can't argue with the market. But as we said last week, it's this sort of excuse my language, it's buggering around about this 127 level, breaks down, looks like it's going to break away, then bounces straight back up. It's just like almost in no man's land. I think we've got to get the guys back from the Hamptons and, Saint-Tropez and the sunspots of Europe to really get some volume in the markets to get them turning a bit again.
So in other words, you're just saying we need to navigate carefully through these summer markets.
Yeah, I think you just day trade it, which I guess a lot of these guys do. I don't think you can take a longer term position at the moment. I think they're too whippy. I would just be in there. I'd be watching a good chart, something which I'm happy with, and just trying to clip a few points out of it.
So let's talk a little bit about Jackson Hole Symposiums this weekend. I'm sure everybody's been there all week, fishing, enjoying bourbon on the water and the beautiful weather in Wyoming. But when push comes to shove, which will be at the all the media tents tomorrow and throughout the weekend. What do you think is going to be said by not only the Fed Chair Powell, but other central bankers that are currently in Jackson Hole? What do you think the tone's going to be?
I think Powell's probably the easiest one to read. He ain't changing his tone. Higher for longer. Thank you very much. How many times has he got to say it? He's not going to say, "Oh, we might pause now." He's just not in that mindset to do it. I don't think. So I think he's going to come higher for longer. I think Ueda, I think he's going to be completely non-committal over anything. I just don't see him shaking the markets. Lagarde, I think she might start backing away a bit. I think out of the big four, I think Europe's got a lot of problems. It's being impacted quite well, very, very harshly by China and the slowdown in China, which is almost like a double whammy that, a lot of the exports go from Germany and France into China, especially the high-end goods that they manufacture, which Christine Lagarde models so adequately with her Hermes scarf, etc. I think that, that those exports will be hit. And at the same time, Chinese goods are getting cheaper and cheaper and cheaper, and they're very quietly taking a huge stake in the auto market in Europe and in the UK. Probably not so much in the States, but you'll see more and more Chinese cars over here under brands that you wouldn't think it was Chinese. Like MG, which is a traditional English brand, is now a Chinese company. So I think that will also hit auto manufacturers in Germany. So I think Lagarde might be a little bit defensive about hiking rates again.
Okay, well that makes a lot of sense. She sounded she looked a little less tan while on the podium at the last ECB meeting. So I want to ask you this. We've seen this nice bounce in equities, especially the S&P over the course of the last 24 hours or so. Is the bottom end in stocks? Do we start buying stocks again, or do you think that this is just more of the beginning of something longer term that we could see a continued pullback in equities? What do you think?
Call me old-fashioned, and most people do call me old-fashioned. I think the bond market leads all the markets. I think the US Treasuries lead the whole of the world's markets. So I'm going to turn that question on its head. Do you think 10-year yields have peaked out with the amount of funding that the US has got to do in competition with the rest of the world? I don't think they have, and they're still edging up. I find it really, really hard to say buy equities with bonds in the mood that they're in. Famous last words, but I just can't see it. So I would stand aside, actually. And I think this evening you've got, I can't pronounce it, NVIDIA?
NVIDIA, NVIDIA, the AI company, NVIDIA.
Yeah, and I think their results are out. And that might
I'm being very sarcastic, by the way, so go ahead.
Envy. I think that might be a bellwether number to watch. As I said last week, I'm nervous of the markets. I'm nervous of the US banking sector. And I've actually noticed, maybe I've been looking for it this week, one or two other people are a bit nervous. I think that commercial real estate could be the problem there. And that might be a spillover from the real estate problems that China's having.
In other words, it's not, we don't have the all clear just yet.
I don't think so. Do you?
Well, I'm doing the interviewing here. I've got plenty of opinions. I'm just wanting to hear your opinion.
Yeah,
but in all actuality, I think if you talk about central bankers, higher for longer is probably the stance they're going to take. Whether the markets can sustain that or not is to be seen. And I do think that this move in the bond market is not over. And I think it's like a train wreck waiting to happen. But the one thing that we should point out is that the yields have peaked at late 2022 levels. So we're finding some sort of resistance up at these levels in yields, which has to be at least respected for now. So,
but being an old Englishman, I'm going to pick you up on your grammar that you use the past, or you say have peaked. I think they are maybe peaking. I'm not sure they've peaked. I think they could do a little bit more, but
no, I don't disagree with you. That's why I think standing aside is probably the smart move at this point. But traders at the Trader Summit want actionable ideas. So where would you be going long the sterling? Because I know you love the cable. I love you love the pound. I'm just kidding. Where would you be selling it?
Euro. I'll be selling the euro again.
You're going to be selling the euro. What level are you going to be looking to sell?
I don't care. I would just be short of the euro. I'd be short of the euro against the pound and against the dollar. I just think it's I think that's the currency with the problems coming up.
Great. Well, that's what we wanted to hear. So, Richard, I want to thank you very much. And for those listening in, make sure you give Richard a big thumbs up, subscribe to the channel down below so you don't miss any of this content here, only found at the Trader Summit. Richard, love having you here. Glad to catch up with you this week. And I hope you get some sun as you go into your holiday weekend.
Today. It's been sunny, but then now we've got thunderstorms coming. So that's probably our last day of summer.
Oh, geez. Well, good luck, and hope it widens up for you over the weekend and gives you some nice sunshine there. Anyway, thanks for joining us, and we'll catch you next week.
Have a good week. Cheers. Bye-bye.
Bye-bye. Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.